Hey guys, welcome to Tan Investing. If you're new here, welcome. In this channel, we will look at investing, savings, Canadian growth investing, Canadian value investing, Canadian dividend stock, along with personal finance. If it's something that interests you, please don't forget to subscribe by clicking the red button at the bottom. Let's get started. Hey guys, so today we will look at the 6 ETF index fund for passive income in Canada, and we'll try to do full breakdown of those stocks here. The first stock is BMO MSCI Emerging Market Index ETF, ticker symbol ZEM. So the investing goal of this stock is has been designed to replicate to the extent possible the performance of the MSCI Emerging Market Index net of expenses. The funds invest in emerging market equity. The manager may use sampling methodology in selecting investments in the fund. The fund may also invest in or hold securities intended to replicate the performance of the index. In addition, as ZEM may hold other underlying ETF, the management fees charged are reduced by the management fee paid to the underlying ETF. The MSCI Emerging Market Index is an equity index which captures large and mid-cap representing across 21 emerging market countries. The index covers approximately 85% of the free float adjustment market capitalization in each country. If you were to look at the 5-year chart for the ZEM, you can see it started less than $15 back in 2016. Gradually, it went up to $22 in 2008, and then it did drop heavy back in 2020 due to pandemic, and then it went close to $26 mid or at the beginning of 2021, and now it's trading around a little bit less, around $24. So if you were to look at a sample, if you invested about $10,000 back on May 31st, 2011, it would be worth about $17,701. So you would be looking at an increase about 77%. And if you were to look at the countries the exposure is happening, it's mainly on China, which is 36.83%. Taiwan is about 14.07. South Korea is about 13.68. India is about 9.90. Brazil is about 4.57. And then if you were to look at the sector the ETF is holding, technology weigh about 21%, financial is about 18%, consumers cyclical it's about 15%, communication service it's about 13%, and the material is about 7.9%. And now if you were to take a look at the holdings, it is holding about 7.38% in another ETF, which is EEM, and then it also holds Taiwan Semiconductor, which is manufacturing, Tencent Holding, Alibaba, about 5%, Samsung Electronic is about 4%, Meituan is about 1.69, Naspers is about 1.28, China Construction Bank Corporation is about 1.04, Reliance Industries 0.9%, 94%, Ping An Insurance it's about 0.93%. So if you were to look at the details of the company, it does have a net asset of 2.3 billion. The shares that are out is about 93.5. The PE ratio, it's about 18.4. And the dividend is about 1.63%, which means you would get 40 cents per share. when I did the thing, the ex-dividend date is reflected as December 29th. So it's every 3 months. So that would be December, January, February, March, and then April, May, June. So June 29th, it will be another ex-dividend date. As we said, it does have large cap um, on it, blend on it. And I think I forgot to include the expense ratio. The expense ratio for this stock is 0.27%, which is pretty low. The next stock that I really like is Vanguard U.S. Dividend Appreciation Index ETF, ticker symbol VGG. So investment goal of this stock is to seek to track to the extent reasonable possible and before fees and expenses the performance of the U.S. equity index that measures the investment return of common stocks of U.S. company that have record of increasing dividend over time. Currently, Vanguard ETF seeks to track the NASDAQ U.S. Dividend Achievers Select Index and any successor thereto. It invests directly and indirectly, primarily in stocks of U.S. companies. So if you were to look at the 5-year chart on VGG, Vanguard U.S. Dividend Appreciation Index, you can see it was close to 30s back in 2016. It has been gradually going up. During the pandemic, it did drop hard, just like any other stocks there. So now, if you look at the growth, if you had invested about 10,000 back in 2013, your investment would be worth about 29,802. So you would be up about 198.3%, 0.03%. The Vanguard U.S. Dividend Appreciation Index ETF, it is mainly holding 99% of the stocks in U.S. and less than 1% in Switzerland. If you look at the top sector holdings, industrial at 17%, financial services at 16%, healthcare at 15%, consumer defensive at 15%, technology at about 14%. And the top holdings, if you were to look at it, Microsoft being about 4%, JP Morgan Chase being about 3.81%, Johnson & Johnson 3.67%, Walmart 3.4%, Visa 3.26%, United Health 3.25%, Home Depot 2.99%, Procter & Gamble 2.82%, Comcast Corp Class A 2.21%, Coca-Cola 2%. And if you look at the total net asset, it's about 816.6 million. The shares that are out, it's 13 million. The net asset value, I'll get to that after. And the dividend is about 1.45. So you would get about 75 cents per share. And the dividend, it does do large cap blend. And the expense ratio, it's about 0.3%, which I also forgot to include. The next stock that I will be looking at is BMO US Dividend ETF, ticker symbol ZDY. If you look at the 5-year chart, investment goal for this stock was a BMO US Dividend
about
ETF that seeks to provide exposure
it did go as
to a
high as
yield
$35
prior to the pandemic.
dividend
And
paying
at the moment, it's
stocks.
trading
The
around
selected
32.50.
company will have a potential for
If you
long-term
invested
capital
about
appreciation.
$10,000, again back in 2013 March, you would have about 27,719. So your portfolio would be up approximately 177%. Were to look at the holdings, it does hold 98% in US, United Kingdom less than 1%, 0.2% in Switzerland. The sector it's holding, financial service being 18.9, technology being 17.5, healthcare being 15.6, consumer defense 11.64, industrial about 9.64. The BMO ETF ZDY, the holdings, if you were to look at it, Bank of America 3.09, JP Morgan 2.9, Chevron 2.61, Cisco System 2.6, Home Depot 2.6, Intel Corporation 2.58, Johnson 2.52, Microsoft 2.47, AbbVie 2.37, International Business Machines Corp 2.35. The total market cap is about 457.5 million. The shares that are out is 14.1 million. The PE ratio is 23.5. It does yield about 3.08%. You get $1.02 per share. And it also focuses on large cap value. And the expense ratio for this stock is 0.33%, and it is trading at the moment $32.97. The next stock that we will be looking at is iShares S&P TSX 60 Index ETF, ticker symbol XIU. XIU seeks to provide long-term capital growth by replicating to the extent possible the performance of the S&P TSX 60 index net of expenses. Under normal market condition, XIU will primarily invest in Canadian equity securities. If you were to look at the 5-year chart, you can see it was around $20, and at the moment it's close to $30. So if you did invest about $10,000 back in May 31st, 2011, it will be worth now 19,298. So you're looking at about 92.98% increase. If you were to look at the holdings of which global, Canada being 98%, Brazil being less than 1%, United States is 0.33%. The top sectors is financial service at 35.77, energy at 13.8, technology at 11.11, industrial being at 10.14, basic materials being at 9.8. So if you were to look at the holdings, you can see Royal Bank being 7.78, Shopify being 7.59, TD being 7.16, Enbridge being 4.47, Bank of Nova Scotia being 4.42, Canadian National Railway being 4.39, Brookfield Asset Management Class A being 3.66, Bank of Montreal being 3.5, Canadian Pacific Railway being 2.85, TC Energy being 2.7. So the total net asset is 10 billion. The shares that are out is about 374.6 million. It's trading around $30.21. And the next stock PE ratio is about is NASDAQ 100 Index ETF, 5%, ticker symbol QQC.F. The shares dividend per share is 99 cents per one share, and before fees and tax expenses. The performance of the NASDAQ 100 Index, the expense ratio for this one there too is 0.18% on an unhedged basis. In the case of any unhedged units, or on a hedged basis in the case of any hedged units, this Invesco ETF invests directly or indirectly. So if you were to look at the 5-year chart here, it was less than $40 back in 2016, and you can see now it's close to $105, $110. So say for example, if you did invest about $10,000 back in June 30th in this fund, you would have about 59,705. So you would be up close to 500%. And if you look at the global exposure, United States being 94.34%, China being 2.33%, Brazil 0.59%, Netherlands being 0.38%, Israel being 0.12%. And then if you look at the sector, technology is about 43%, Communication service about 19.89. Consumer cycle, it's about 17.66. Healthcare about 6.54. Consumer defense, it's about 4.70. And if you look at the top 10 holdings, Apple being about 10.69, Microsoft being about 9.62, Amazon being about 8.29, Facebook about 4.4, Alphabet Class C being about 4.4, Tesla 3.79, Alphabet Class A being 3.62, Nvidia 3.13, PayPal 2.37, Comcast about 2.04. And then if you look at the net asset, it's about 405,000.2 million. The shares that are out is 3.7 million. It's trading at $113.37. And the next stock that we will look at is
Look at the
via
5-year chart
the
here.
Vanguard
You can see it was
S&P
trading
500
below
Index
$50 back in
ETF,
2016,
ticker symbol
and it's close to $90 at the
BFB.
moment.
This
So say, for
seeks and
example, if you did
tracks
invest
the external
$10,000
reasonable
back
possible
on
before
November
fees
30,
and
2012,
expenses.
the
Now you
performance
would
of
have
broad
a
US
value of
equity index that measures the
41,904. So
investment
you would be
return
up
of
a large
approximately
capitalization
319%
US stocks. And if you look at the global exposure, as I said, it's mainly United States 98.89, 0.52 is United Kingdom, 0.32 Switzerland, 0.17 China, 0.05 in Singapore. And if you look at the sector, its technology is about 23.49, financial is 14.17, healthcare is about 13.12, consumer cycle is about 12.21, communication service is about 10.92. If you look at the top holdings, Apple being 5.87, Microsoft is 5.38, Amazon is 4.2, Facebook is 2.21, Alphabet is 2%, Alphabet 1.96, Tesla 1.54, Berkshire Hathaway 1.947, Morgan Chase it's about 1.33, Johnson is 1.2. And then if you look at the market net asset, it's 4.5 billion. The shares that are out is about 51.8. The net asset value at the moment is $90.84. The PE ratio is 24.5. It does give you a yield of 1.24, so you would get $1.13 per share. And it does have, it is investing in large cap blend. The expense ratio, it's about 0.08, which is very low compared to the other ones that we looked at. I hope you guys enjoyed this presentation. So on this one, the reason I covered these ETF is because, as I said, I like to invest in Canadian market, but I definitely want to have some US exposures. And I think in order for you to have some of the US exposures, these are some of the great ETFs that you can look into and invest in. And the expense ratio is also high. With the examples that I have given you, you can see how you can invest for long term and how your ETF could grow over time. So I hope you guys enjoyed the video. So if you really like it, please let me know in the comment section below. If you have any other suggestions as well, also let me know in the comment section below.